Alright, so in this video we are going to continue part 2 of chapter 2, that is statement of financial performance. Okay, so the statement of financial performance is referring to the profit and loss account. Okay, so in the statement of financial performance, okay, the goal is to calculate the income of a company. Alright, so normally the profit and loss account is prepared for 1 year, right? Okay, so the income statement measures a company performance over a specific time frame, so normally 1 year. Alright, and then the income statement presents information about, okay, so basically 3 items lah. Okay, the revenues, expenses and profit. So if you look closely, okay, how much money the company generated. So we're talking about the revenue, okay, and then we want to look at how much it spent. Okay, we look at the expenses, and then the difference between the revenues and the expenses, so that is the profit, okay, for the company. Okay, so in the statement of the financial performance also contains the number most often used when a company announces its results numbers, such as the revenue, earning per share, okay, sometimes dividend payout ratio, okay, and etc. Okay, so this one is the the same slide. Alright, the revenue. Okay, so the revenue known as sales, okay, sales, okay, that represents all the money a company brought in during a specific time period. Okay, all the money the company brought in during a specific time period. Although big companies sometimes break down revenue by business segment, okay, or geography. So this one like macam the big company has their subsidiaries, right? Sometimes they break down the reporting into segment reporting or geography. Alright, and then the best way for a company to improve profitability is by increasing sales. Alright, consistent sales growth has been a strong driver of a company's profitability. So this one is the best way to improve profitability of the company. So it is suggested the company must maintain ataupun increase their sales. Okay, the best revenues are those that continue year in and year out. So temporary increase such as those that might result from a short-term promotion are less valuable. Okay, and should garner a lower price to earnings multiple for a company. So dia nak cakap kat sini, the best one is to increase sales all over the year lah. Okay, not only because of the promotional effect ataupun the seasonal effect. Okay, the sales increase only for that seasonal period. Okay, so the best is to maintain ataupun to continue best revenue year in and year out. Maksudnya all year long. Okay, next is expenses. Okay, so expenses basically can be categorized into two. Okay, number one is the COGS, and then number two are the expenses. Okay, COGS, which is a cost of sales, and then other expenses lah. Alright, other expenses. Okay, so the COGS or cost of sale ni, they expend most directly involved in creating revenue. So it represents the cost of producing or purchasing the goods and services sold by the company. Okay, so the other expenses ni yang ni lah. Okay, like selling, general and admin expenses, okay, like marketing, salaries, utility bills, technology expenses and many more. Alright, so that's expenses. Okay, so now let's have a look at what is profit. So generally speaking, the profits come from the revenue minus expenses. Okay, so that is a broad definition. But if you look closely, what is the gross profit? Okay, when the gross profit is equal to the revenue, okay, minus the COGS, cost of goods sold, ataupun the cost of sale. So that is the gross profit. Okay, and then the operating profit, okay, is the gross profit minus with the operating expenses. Okay, all right. So the operating profit, the profit company made from its actual operation and exclude certain expenses and revenue that may not be related to its central operations. Alright, next, what is the net income? Okay, net income is the company's profit after all expenses, including financial expenses, have been paid. All right, so often called as a bottom line. All right, and it's generally the figure people refer to. So this is the figure the people will refer to when they use the word profit or earnings. All right, so basically when the company has the high profit margin, that's the net profit also will be high. Okay, so when the company has a high profit margin, means the company has more advantages over its competitors. So companies with the high net margins have a bigger cushion to protect themselves during the hard times. Okay, I mean to say when they are able to control their costs, they can also increase their profit. Okay, so the companies with low profit margin can be wiped out in a downturn. So this is dangerous. All right. Okay, dangerous when the company not able to control the expenses ataupun the cost. Okay, so the company might experience losses. Okay, and it can be wiped out during downturn. And then the companies with the profit margins reflecting a competitive advantage is able to improve their market share during the hard times and leaving them even better position when things improve again. Okay, so that is net income. Okay, so this is the example of the income statement. Alright, so this is just only the example. Kalau kecil besarkan sikit so that you can see. Alright, so item number 1, the net sales. So the net sales ni is the revenue lah. Okay, so this one is the revenue. Okay, we minus with the cost of goods sold and then we dapat gross profit. Kan? Gross profit. And then minus with the other expenses. So ini other expenses. Other expenses. Okay, like selling, admin, okay, depreciation and other income. Alright, so that you dapat earning before interest and taxes. Okay, so ini adalah EBIT. Okay. Earning before interest and taxes, also known as operating profit. Operating profit. Alright, and then minus interest, minus interest dapat earning before taxes. Okay, minus income tax and then dapatlah the net profit after tax. So this is the net profit. Okay, net profit ataupun sometimes it is called as net profit. Net profit, sometimes it is called as earning after tax. Okay,